Well, the economy is still chugging along, and consumers are paying off debt. All good things.
That's right.
Right?
That's right.
Right?
Right.
Okay.
Well, you would
All right.
think, but
All right.
for some still struggling to make ends meet, longer-term loans, particularly on cars, are gaining traction. ABC 2 News' Charlie Krausen explains.
Veronica Viveros is in the market for a new car, but will soon have new demands on her monthly budget that will force her to shop for a longer-term loan.
I am expecting, and we do have a lot of bills and finances, so I'm looking at about $300 to about $350 a month, and that would help out so much.
If she's in the market for a $23,000 car loan and wants to keep her payments around $350 a month, she'll have to look at a 72-month loan. That means her new baby will be 6 years old and going into the first grade by the time she pays that car off.
A consumer that's opting for a $25,000 new car loan can save around $200 per month by opting for a 72-month loan as opposed to a 48-month loan.
A $350 monthly car payment can be enticing for some people, but can also be pretty risky.
The longer you extend your term, the longer it's going to take you to get out from a negative equity position. So those that take a longer loan find themselves at greater risk for being underwater for a longer period of time.
And that doesn't take into account what could happen over those years. A car accident or a blown engine can devalue the car, putting consumers with long-term loans into bigger financial binds. That said, more and more people are sticking with the same set of wheels further down the road.
The trend in the last 10 years is people have kept their cars longer. The cars have been built better.
And experts point out not all long-term loans are bad.
A general rule of thumb is that consumers should try and keep their monthly payment at about 20% of gross income. So if that means you have to opt for a 5 or a 6 year loan as opposed to a 3 or 4 year loan, then that generally makes sense.
But most experts do not recommend 96-month loans, which are also now available. Whatever you decide to do, figure out what you can comfortably afford to pay for a new car before you go to the dealer. Veronica is leaning toward a 6-year car loan. That way, her car expenses can take a back seat to the money she needs for a growing family.
It would work out great for me.
Remember that interest rates on 72-month car loans are larger than those traditional loans, so do your homework before going to that dealer and making your buy. You can do that research at places like Bankrate.com, Edmunds.com, or KBB.com. Charlie Krausen, ABC 2 News.